Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Monday night, November 7th, 2022. So, this is a flashcard on the gradual release of responsibility model, which is a technique that we use a lot in graduate school and adult learning, and which I try to model in the way we're doing trader education, which takes into account that where you are in the learning curve should govern the best relationship between you, the teacher, and the student, and the material, and that relationship and those roles can change over time as we acquire the skills we need to become self-directed and self-managing, which is what we want. We want to be independent as traders, as Master Shi Heng Yi talks about, the Shaolin master, learning to navigate without a guide so that you are genuinely a free person, um, master of your own house. And so this is a sample of what I was talking with the super traders about this week, and I posted about a hour and 45-minute discussion on that on Patreon, for you guys to review and listen to some thoughts on some of the different ways in which coaching can be done, and how it might relate to trading. So I wanted to share that with you. So this is the sniper trade of the day. And what I want you to notice is that what we had was, on this particular, oh, come on now, really? Stand by. My screen has frozen. Just a moment. Can you guys hear me okay? Mic check.
Yes, we can hear you fine, Ken.
All right, so here we have a gap up, and now the 3-minute bar has closed, so I've marked off the high and the low of the bar. And so if we're using the OR3 approach, the opening range 3, we might set up some kind of bracket where I'm ready to go long at the green line, short at the red line on a breakout. All right. So let's see how this gets along. So we get a breakdown of the opening range 3. I get a short position and my standard risk box. And then in that same bar, almost immediately take a zero point 0.7 loss when it reverses sharply, and I decide that's enough. I'm not going to stick around for a full 1 hour loss. It then reverses and leaves the box twice. So I re enter on the short side, which is a violation of the OR3, after the RL10 is rolled over and crossed the baby dragon. So I've basically just re implement that same trade. Check or hold. All right, so now we've got about 3 or 4 bars in our favor. I should have my stop uh, in the money by this point. I get a 1-2-3 reversal, and so I decided to take about a half an hour gain to get paid and to offset the first half an hour loss. It's approaching the PSAR, but it cannot penetrate the PSAR. The RL10 rolls over again, crosses the baby dragon, and now I'm stalking a re-entry to the short side because I'm noticing um, that we have a high, a lower high. It rejected the PSAR, and so now somewhere around in here, let's say the bottom of the dragon, or the bottom of the RL10, I can be thinking of getting short on this. Again, I'm going to use the standard risk box. Check or hold. But instead of rejecting the PSAR and breaking down to my entry levels, instead, this thing reverses and gives me a COTA 2 to the upside. So now what I'm noticing is this. And so I take the PSAR flip, with the standard risk box, and now that thing is moving out in my favor. Now, when I get about this far into it, the stop that I have here at the bottom of my wrist box, by about this time, I feel like I want to be about here. Like to the spine of the dragon. So now I've locked in. I've locked in a gain. I wouldn't be offended if you decided to put that here under like a 1-bar low. Either one of those looks reasonable to me. Okay. I don't always use anything, but I always use something. But lately, I've been using the OR3 an awful lot, like about 80% of the time, on symbols that are sniper candidates, that are my reliable subjects, and the OR3 is plenty of reason for me to get into the trade. So I don't always use anything. I don't. Um, I'm not that doctrinaire, but I am a creature of habit. And if you've watched me over the last 100 days, you've seen me use the OR3 almost every day. So, yeah, I use it a lot. One of my favorite techniques. Like I have to have a reason not to use it, I suppose. But when I'm looking to get in early, that's all I really need.
Oh.
All right. So now what we're looking at is that we're taking out the previous high of the RL10. So if I were to draw this over, I'm getting very close to what we would call an emerging dragon. So this is starting to feel like it could work. Now by this time, I feel like my stop ought to be probably about here. And we're getting close to 2R in hand. By this time, I feel like my stop ought to be at about the skin of the dragon, something like that. And maybe a second position. By this time, we've got clearly 2R in hand. We could be using an extension of the PSAR and say, as long as it stays to the northwest of that red line, I feel pretty good. I might use the southern skin of the dragon and draw a line like that. I might use the spine of the dragon and do something like that in order to just keep locking in pieces, and then draw a trend line that would tell me when the current strength of trend is weakening. So you might do a technique like that, and then periodically, if you've drawn those rising lines that reflects the strength, you could then just start nudging your stop up and locking in pieces as you go. You might also have put a second position on by this time. The first place that I considered putting a second position on would be, let's see, like I would say approximately here, because now I get 2R in hand. I've certainly cleared the high of the day, and then this thing is working. So now, by any stretch of the imagination, we're in the exit zone somewhere in here. The only reason not to get out would be that the RL10 did not touch the PSAR. So if you're using the confirmation of the RL10 crossing the PSAR, you're not out. If you're using the price touching, then you would be out at this yellow dot. If you are out at the yellow dot because of reasons, then when you realize it hasn't failed any further, and then you notice strong support here, and that the Kata 2 has resumed, you might also then elect to re-enter here. The point I want to make is that if you get out at the first yellow dot, it's in order to protect against a reversal all the way back down to your entry. That's a significant gain that's locking in 2R. But by the same token, we haven't moved a range stat off the low, so there's more room in this thing, legitimately. So you could re-enter at the yellow dot. That's your call. It would be an easier decision to get out at the first yellow dot if you had taken a second position over here where we talked about before, because then your second position is at scratch and it didn't cost you anything, but you certainly can't let it go negative after having been a half an hour to the upside. Check or hold? My actual exit on one position was here, as I'm using the RL10 crossing the PSAR as my exit guide. And so what that gives us is approximately 1, 2, 3R on the first position entered from back here. Now that's a Kata 2 re-entry because of that reversal and higher after the RL10 dips and then it resumes. So I just buy the PSAR re-entry. And again, I'm using a standard risk box. Which gives a fractional gain. Now we're at 2 p.m. That could have been a stop and reverse, but Cliff and the metals were the strongest sectors and targets, and so I was not eager to get short the strongest sector and strongest stock in a market that was grinding up. But by this time, it had fallen below the previous belly of the RL10. So that felt like what kind of pattern? What would you call that pattern? Collapsing dragon. Yep. So I put a standard wrist box on it. And it scratches. And now it's after 3 o'clock, and I just felt like that was enough. So the first two trades about break even. The second trade adds 3R, or I'm sorry, the third trade adds 3R on the single position. The fourth trade is a fractional gain that pays for the commissions. And the fifth trade was a scratch, and I think that's all we did today. Yeah, that was about it. All right, let's take a look at the 30-minute chart. So today was a grinding gain up, consolidation, and then a second leg up to close pretty well. That was a pretty strong statement for the week ahead, that it held the gains from last Friday and then pushed it a little bit higher. We're up to almost 380. We're halfway to the 10-day high, with still a little bit more room to go, and this was actually a pretty favorable day. Surprisingly good. When we look at the daily bars on the 30-day look back, we can see that the daily bars gave us a 1, 2, 3 entry near the close. So that's actually a favorable sign. And if we get another day or two of gains, that RL10 is going to reverse tomorrow. And then that's going to give us, officially well, let's see, what would we call this pattern where I have support, then a higher low? If that holds, and then tomorrow we get something like a continuation pattern here out of the yellow zone, what might we call an automatic entry at the green line? Yeah, we'd probably call that a kata 2 with a 1, 2, 3 entry. And I would treat the tactical zone as this space to the top of the RL10, and then anything north of that as a very strong signal of a, taking out the 30-day high. Anything above 390, I would take that as a favorable sign that we could get to 400, which is an important round number. When I look at the 150-day look back, you can see that we're right at a critical state here. And it's poised to go strong to the upside, to test that 30-day high. That would be the favorable upside move. But then if this collapses, we could see a tactical move down to test support around 360 or 358, something like that. So there's actually a pretty small region of indecision in here. Sorry, that should be a red box. And then if that breaks below the support levels here, then that would be a decisive move downward in my view. Okay, so there's some tactical opportunities in what looks to me like a compound critical state, because there's a critical state developed on 3 different time frames where we can make an argument for a strong move in either direction, and that the size of the move would be much larger than the yellow zone of indecision. So I take this as a favorable condition for short-term traders such as myself. Let me clean that up just a little bit. Okay. Let's take a look at the sectors and see what we got today. Alrighty. Let's see if this is going to cooperate. Nope. Damn it. All right. So the S&P was up 1% today. What was better? The Q's up 1.10 and diamonds up 1.3. What was worse? The Russell still 0.45. Emerging markets 0.06. The worst performer was treasuries at minus 1%. So let's take a look at the underperformers altogether. All right, so the S&P here at 0.96. The first underperforming sectors, staples and lumber plus 0.8, I should say. Materials 0.8. The Aussie dollar and the FANGs 0.6. Agriculture and residential real estate at 0.06, and now here's the cut line to actual losses for the day. Now the first cluster, wheat and precious metals, oil, lithium, ARC Innovation, I should say, consumer discretionary, Mexico, and blended commodity. That's between minus 0.23 and 0.87. The next cluster, biotechs minus 1%, the VIX minus 1.1, which is a favorable sign for tomorrow. Clean energy 1.5, Bitcoin 1.6. Then we have Ethereum and ARC Genomics minus 2.4 and 2.9. Worst performing sectors, marijuana minus 4%, Brazil minus 4.5%, and then Tesla getting smashed again for minus 5%, closing under 200 now at 197.08. Okay. Individual companies that did worse, Coinbase minus 3, Alcoa minus 2, Rivian and Robinhood minus 2%, Apple only at plus 0.3, Intel and Devon underperforming. So let's take a look at our upsides. Again, here's the S&P benchmark at 0.96. You had finance at 1%, commercial real estate 1.12, the other lumber 1.4, tech 1.67, uranium 2.7, oil exploration 3%. The winning symbols, Cliff Natural Resources 4.5, Squarespace and PayPal 4.25 and 3.33. U.S. Steel in the metals at 3%. Microsoft, Texas Instruments, and NVIDIA all better than the S&P. So if we take a look at our metals, 2 out of our 3 metals were at the very top, Cliff and U.S. Steel, and that's where I'm looking for more momentum tomorrow. Whereas Alcoa, I should say, was a big underperformer in the metals. So you're seeing a distinction between aluminum and steel there. The semiconductors, Intel lagged at 0.74. NVIDIA was better than the market at 1%, but lagged the Qs. And then Texas Instruments was the strongest semiconductor. It was better than S&P Tech and the NASDAQ 100. So Texas Instruments feels like it has a little bit of juice in it. Okay. And then Devon Energy was right around where the market was today at plus 0.78. Yep. Okay. Where's my... I was looking for my XLE. Not on the chart. Okay. All right. Let's take a look at the traders today. See what they've got going on. Let's see if that's going to let us draw. That would be nice. Nope. Sorry, guys. Sorry, I can't draw. I don't know what the something on my machine. I'm thinking. All right, here's Nolan in the German DAX on 5-minute charts. He gets the first nice move out of the SQC and the PSAR flip for 2.7. The Kata 2 is pretty good. I don't mind this short because what you're trying to do is target the return to the VWAP, but it did not penetrate. Neither price nor the RL10 penetrated the PSAR, so that short might have been premature in my view. And now you start second guessing yourself with some quick chops. Now, this is where, north of your name, this is where the first place that you get an actual short signal when you have the PSAR flip and lower highs, and the RL10 and the Dragon have both rolled over. And so you can see, if you can be a little more patient, there is the beginning of a little trend. Now, you wouldn't have gotten paid much, but the excellent first trade got chopped away by, I think, premature short on that second one for -1R is what I think you're beginning to overtrade there. On crude oil, here's the, let's see, this was a PSAR flip to the downside, immediate stop and reverse, and then a re-entry. Yeah, I don't know why you're out on that one. Intra-bar noise. It didn't even, I mean, the RL10 is still up. Didn't even penetrate the Dragon with price. And then all that entire move is yours to take. And you're noticing the places where reentries are authorized. Now, this is a great short because you have a clear high and a lower high and a PSAR flip and a collapsing Dragon. This is a perfect one, and your target is down to the VWAP, and you see that you get that. If you get out here, then you must get in there. And then the second leg is as big as the first leg. So keep beavering away at that. All right, here's Tim with some really good work today in Honeywell. And he's working on increasing his span of control. This is a good second Kata 2 formation here. This could have been a short position. This could have been a re-entry on the long side, but he was focusing on Microsoft and Boeing, and so this did not follow through immediately, so he steers clear. That's a good shift of attention. Here's the oil. There's a good Kata 2. Gets paid. He waits for the collapsing Dragon and the PSAR flips of the second entry short. And crushes this. Now here's an opportunity for a second position here because you got the R10 wiggle and collapse. It violated this support level, so there's a legitimate second entry in here. That's a great exit, and then a stop and reverse gets paid. I think both of those are fine because you restricted the loss to 0.4, and it could have gone large, and then you keep firing. You got paid, got paid, got paid. So that's a pretty good 2R day. Here's Boeing. Gets paid nicely. A quick loss, and then the reversal recovers that, so you're up 2. Very nice work. Microsoft gets paid small, then very large. Gets a great short, and then a wonderful stop and reverse for 7R. Now, the place to start looking for a second position on that long grind up, in which you've got tech in the lead and the S&P is positive on a day when it refused to fail. So when it takes out the previous hump, approximately here, there's a possibility of a second position right there. But that's really good work, Tim. And then the final piece, he's showing the connection between the multi-time frame lenses of the higher time frames to help him get directionally correct in Microsoft, which paid off for 7R. So really well done. You found the mover today, and you really exploited that. So good focusing during the day. All right, let's shift to the reports. Let's go to dashboard number one. We're still in bearish normal conditions, but a strong move today put us at the top of the stack here in the 2-day look back. The 10 and the 30 are starting to slowly heal. The risk Z is alerting us that upsides are still possible. The weakest areas for failure, if we get failure tomorrow, we're looking for the internationals, Euro-Asia blend, Asia Pacific, less Japan, emerging markets, and the European 350 are all in a position where dead cat bounces are possible. The min pains, Goldman, ExxonMobil, Chevron, Caterpillar, Procter. The max pains, Tesla on further collapse, Microsoft on further gain. So those max pains are in a position for a large move in either direction, all of them. I mean, Tesla could rebound tomorrow easily, and Microsoft could give back a good portion of its gains. But those are the movers, and so you want to find the movers and trade the movers. The Dow tactical summary, lots of breakouts to the upside, as you can see. Only Tesla was the break. So that's really Tesla hatred out there. And you can't make a living shorting Elon Musk. ETF 30, lots of dojis today, a couple auto framers in technology and consumer discretionary, and mostly breakouts. There were no breakdowns today, so I like the strength in energy and materials. Just a couple auto framers to consider. Microsoft is still in great shape, as is Tesla and tech, and the broad market itself. That's a market that is failing to fail, and that should be interpreted as a tentative good sign in a bear market. There's lots of opportunities for it to fail. It is not. Lots of daily squeezes based on the small range of today, so that's good. Plenty of Godzillas in the S&P 500. You got Tesla on a Godzilla in our tactical set. I'm looking at the one-day movers, and there's, again, quite a few symbols better than 2-to-1 on today's range, as you can see. And then on the most volatiles, I'm looking for that double stack of green-green. That's an enraged move. Green-red is something that has been volatile for 5 days, but very quiet today, and that could be a consolidation and potential reversal. So you're seeing a lot of that action today. There's the stats for the snipers and the auto framers, and the MACD 4 seasons are showing us mostly summer and fall, so that's above the zero line. So this is a market that is slowly and quietly healing. Lots of green across the board, only Tesla and treasuries in the red for today. And that's why Tesla is so intriguing to me. It's got to be on your priority list for trading in both directions tomorrow. And that's everything I got for us today. Let's get this published and processed. And sorry I couldn't get the drawing sorted, but there we are. I sent you a copy of that gradual release of responsibility model. I just think that is a sensible way to think about organizing your own personal learning journey in conjunction with your teachers and coaches to ensure that you are becoming self-actualized students of your own trading, answering your own questions on what works for you, knowing where you are on that sliding scale. It's good to ask questions, but you also want to have anticipated my answers so that you can compare what you think I'm going to say to what I actually say, and then that will be your check on learning to see the degree to which you have understood me as a teacher. Is when you can start reliably predicting what I'm going to say, you know, you have snatched the pebble from my hand, and it's now time for you to go. So take good care, and we will see you in the chat room tomorrow.